But I got to tell you, I think the market's all wrong here. I don't. It's like traders must be living in the past. So you miss your streaming numbers by a little, but everything's opening up. Suddenly the theme parks are open again. Suddenly you can make movies again. You make movies, you create products, and then based on the characters, suddenly you can sell those again. How can they possibly be looking at this as half, only half or half empty instead of half full?
Well, Joe, your thesis is not one I disagree with at all. I think the market's gotten ahead of itself when it comes to assessing Disney's future. Probably the nicest thing you can say about this quarter is whatever happened to Netflix subs in terms of coming out of COVID or pull forward. Disney got hit with the same thing. But Disney's got more to prove than Netflix. Netflix doesn't have its revenue per sub declining. Netflix doesn't have most of its subs coming in from very low priced ones in India, where people seem most attracted to cricket there rather than Disney programming. Netflix doesn't have to make up for a core business that is unwinding Disney Channel in the middle of COVID with all kids at home, had its ratings declining 40% year over year. Disney has a lot more headroom in terms of growth than Netflix because it's just getting going, so you'd expect more growth. And where it really needs to make progress is on engagement. You know, if we're going to be honest about who's attracting kids, it's first YouTube, then it's Netflix, and then it's probably Fortnite and Roblox before it is Disney in its various forms that are attracting kids. Now, Hulu held its pricing, which was good to see. But at the same time, again, over COVID, Hulu grew year over year, total 9 million subs. And the thing that really surprised me is its ad revenue per sub decreased, which is a red hot advertising market for streaming. That one I don't understand. So there's a lot there for Disney to prove. They did get out of the box really, really fast. The parks are going to come back. Chapek said that forward bookings were back to 2019 levels, but there's a lot there that the market is overlooking.
And Sarah, so Netflix, one of the reasons that their growth slowed was because their content isn't what it used to be, because you can't make things because everybody's wearing a mask. So, you know, so Disney's streaming isn't up to speed, but now they're going to be able to make more content. I don't see why that's not a net positive. I look at it this way. It got down to about 85, right? It got under 90 a year ago during the height, a little over a year ago. So it rode streaming back to doubling. And so people just got fixated on that's all that matters with Disney. You agree with that?
I think that's exactly what happened. I think that's why that stock really shot up, although there was some momentum late last year when they started to see optimism around the vaccine and parks and theaters open up. But I think to Tom's point, one of the things that spooked investors this time, whether or not you agree with it, was that average revenue per user going down. Now, Disney says that's because Hotstar subscriptions, the average revenue per user is just so low. That's concerning to me. I mean, to Tom's point, this company needs to prove that they're going to be able to juice profits out of their streaming service one day. They're not just behind Netflix, but they were also behind in their own projections there. So it's going to be a huge problem for Disney unless they can figure that out. I think for them, the big key is how does this addressable advertising business that's working for Hulu, although to Tom's point declined last year, continue to grow in markets like India, where Hotstar revenue is just really low. That's something they're going to have to really focus on if this streaming business is going to become profitable, especially while growth is slowing.
The Jungle Cruise is coming, Tom. You know anything about it? My buddy made that movie, and it's got The Rock and I think Emily Blunt or something, and it's going to be one of these hybrid things, released but also streaming but also released. Is it going to do well? Do you know?
Well, Disney does blockbuster movies well, but Disney's gotten a lot of credit for being all in on streaming and the legacy traditional media company that's really put its shoulder behind getting into streaming. And, you know, you take a look at their motion picture release policy now, And they're not really all in. They set a 45-day window for theaters, which is pulling back some in terms of how much exclusivity the theaters will have. But they're not going day and date on release to streaming. And they're still going to charge $30 extra for movies at home, as opposed to giving it as something to really goose their streaming business. They're not all in really when it comes to all their programming resources. They're still putting a lot of money into broadcast and cable original programming, and that isn't putting it all in behind streaming. And the biggest issue I think they have is for Disney really to show that it's going to steamroll with streaming. They got to put ESPN Plus, Hulu, and Disney Plus together as one service and drive it as one service, both in the U.S. and globally.
Shepard Smith here. Thanks for watching CNBC on YouTube.